Now, the ninth point is to invest in stock markets, we need to be very intelligent and educated. This is one thing which I see a lot of people, even people who are really, really earning well, they may not be very educated, but they may be earning well, and they think because they don't have education, they are not suitable or qualified to invest in stock market. In fact, Warren Buffett says it very beautifully. He says, you don't need to be a rocket scientist. That means a person who's really intelligent. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. It's not a competition of who's more brilliant, who's having a higher IQ, and so he's more successful. It's actually a question of who is having probably more emotional balance, etc. Let me tell you that in investing, as long as we have basic average intelligence and common sense, we will do sufficiently well. Many times, IQ is not as important as EQ. Can anybody help me and tell me what is EQ? I'm sure many of you are aware of this. What is EQ? IQ, we know, intelligence quotient. What is EQ? What is the full form of EQ? Emotional quotient. Fantastic. I'm happy that you're aware of such things. Emotional quotient or control over your emotions. Most of the times, if you have invested in the stock markets, you would have realized this. And let me tell you out of experience of the last 12 years of investing in the stock markets, my personal experience. If you know a lot of technical points about stock market, but you don't have the right emotional balance, you don't have the patience, you don't have the discipline, you don't have the right kind of attitude towards stock markets, you could be a PhD in finance, you could be a chartered accountant, and most likely you may not end up with making money only because emotional quotient is a little low. Intelligence is very, very high. That's not sufficient. Even if intelligence is on the lower side, if it's not very high, acceptable. But if your emotional quotient is quite low, not only for stock markets, for a lot of aspects of life, it's going to be quite difficult. If you're extremely brilliant but are not able to control your emotions, it's very unlikely that to taste success in investing or in any other field. It could be your career, it could be relationships, your personal relationship with your members of the family. Absolutely, emotion, control over the emotions, control over your fear, greed, anger, etc., all that matters in other spheres as well as in stock market. Now, the 10th myth is to invest in stock markets, we need to be expert in computers and internet. Many people have this problem, especially the people who are above 50 years. Many times we see they are really educated and they are working in good organizations, but they feel that they are not very comfortable with computers, internet. They know how to do it, but they're not very comfortable with it. They're not very tech savvy like the younger generation. They feel that they can't invest in stock markets. Many people are not tech savvy, feel some kind of inferiority complex that they will not be able to invest since they do not know how to use computers effectively for research regarding stock markets. Truth, being tech savvy, of course, it helps you because it makes your life easier. Internet is there, you're able to read, you're able to go through some information and research, etc. But success does not depend on it completely. I know many people who actually don't even know English. They cannot even open a website and understand what is there. But they have certain traits that maybe you and me also don't have in terms of a lot of emotional balance, a lot of patience, a lot of common sense, lot of discipline, which many other people who are extremely tech savvy, extremely educated, but lack certain other qualities. This is one thing very interesting. Stock markets are not required since my parents never invested, but they are financially comfortable in their old age. What do I mean by that? Stock market, most of the people, if you are below 40 years, then your parents are somewhere in 60, 70 years right now. They have most likely 95% of the people would not have invested in stock markets. They went on investing in bank deposits, maybe some properties and insurance and these kind of post office deposits, etc. And you have started to observe them and see, my father did not do anything, but he's very comfortable today. Why should I also take additional risk of stock market, try to learn, have a chance of making losses? Instead of that, I will continue with my bank deposits, insurance, and other instruments which have no risk at all when you look at it in that way. Now let me explain this. Maybe many of you are not aware of this, or maybe many of you have forgotten this. 25 years bank FD interest rates were 12 to 14%. Somebody on the older generation will agree with this. You can check up on the internet as well. And inflation was 6 to 8% per annum. Today, bank FD interest rates, I'm sure you realize, you watching the news, it's become 5 to 6%. ICICI Bank is giving 5.25% per annum for a 1-year FD. And that is before tax. You need to pay tax on that. And inflation is same 6 to 10%. It is quite high. It's been high before. It is high now. Bank FD rate was high earlier. Now it is absolutely low, and it does not, and there's no chance of it improving. It will reduce further in the years to come. Many people are comparing the father's generation, where it was in some way a test match. It was a test match in those days, a cricket test match 25 years back. Today it's a T20 era, T20 zamana as you call it. And if you're thinking that I will play like Rahul Dravid in the T20 matches, I don't think you will find the required results you require in life. In terms of, Rahul Dravid was a fantastic batsman, one of the greatest batsmen in the earth, but he was suitable for one particular type of kind of a match, which is a test matches, where he was extremely good. But when you saw him play for Bangalore and for the other things in the IPL, you realized Rahul Dravid is not looking so suitable for 2020 matches, because the era has changed. The 2020 Zamana is different. His skills are not matching this kind of format. How many of you have realized this particular thing about Rahul Dravid, where he is looking great in one thing, but not looking so good in the other thing? How many of you realize? If you say realized, just type realized. So so that I know that you understood the difference. How many of you realize this, that he is suitable for something, but not suitable for this generation? Absolutely, absolutely. No doubt he's a great batsman. Similarly, putting only money in your FDs and post office is not 100% suitable for your generation. I'm talking about somebody somewhere below, anybody below 50 years, not suitable. I'm saying 100 rupees as savings should not be 100 rupees in the bank. It has to be spread in various instruments. If a person invests all his savings in such instruments today, he will not have sufficient money in the future, since costs are higher and inflation is more higher these days compared to before. Just compare what was the school fees you and me paid and what is the school fees you're paying for your children right now. The difference is huge. You definitely need to invest in a basket of securities. Remember, many people come, they think they get motivated, they put all their investments in, all their money in stock market. Wrong. All the money in real estate. Wrong. All the money in bank. Wrong. This may look like common sense. It is diversification, a simple word where I divide my money over various assets. It may look like common sense, but I will tell you from experience, many people don't follow it. In fact, they say common sense is not very common. I've realized this, I've seen it in people, very educated, very intelligent, but they make very silly mistakes without them knowing, probably, or without having the right, what would you say, required having the right thinking to invest, and they just invest blindly. Let me just show you some statistics, and I want you to just observe this. You have heard the negative sides. Let me actually show you a few positives of stock market today. One-time investment of 10,000 rupees on 3rd January, which is about 20 years back, in Aisha Motors has resulted, I calculated these figures about 2 days back, 13th May, it was 29 lakh rupees for an investment of one-time investment of 10,000 rupees. Keep your questions as it is, because if you ask me questions or make some comments, I'll not be able to read it. It will just go away, wasted. So it gives you an average percentage, given you an average percentage of 32% per annum. Bajaj Finance, 10,000 has become 43 lakh rupees, 34%. This is in no order. It is just a jumbled order. Vedanta, 10,000 has become 5 lakhs. Lupin, 10,000 has become 16 lakhs. Axis Bank, 10,000 has become approximately 8 lakh rupees. And Kotak Mahindra Bank is around 11 lakh rupees for 10,000 investment. Asian Paint, around 9 lakhs. HDFC, 5.5 lakhs. HDFC Bank, 5.3. Maruti, it's not 20 years, it's around 17 years. It's become 3 lakhs for investment of 10,000 rupees. Bosch, it's around 1.87 lakh rupees. Sun Pharma, 2.97. Balakrishna Pharma, 70 lakhs. L&T, 1.29 lakhs. Motherson Sumi, approximately 37 lakhs. Havells, 42 lakhs. Shriram Transport, 10 lakhs. Godrej Consumer, around 12 lakhs. Titan, around 11 lakhs. And MRF, the famous company, it's around 2.5 lakhs investment. The value of today's value for an investment of 10,000. Now, let me tell you something. This is one of the other misconceptions that many of you are typing. That's why I said teaching you stock market is easy. Getting rid of your misconceptions, maybe it takes another, maybe if I take 10 hours also, it may not be sufficient. You said it is a past. Agreed. But have you thought for a second that 10 years back also, HDFC Bank was a good company? Have you thought about that? No, you think that HDFC Bank did not exist. Suddenly it became a great company. Many people think Virat Kohli is an overnight success. Now last 10 years he's been playing beautifully. Before that he was nobody. Virat Kohli has been playing right from under 19 days and right from that before that for Delhi. And he was already known to be a good player. He just became better. It is easier to pick up Virat Kohli because he was already performing well. I understand if somebody was not doing well and suddenly he becomes a hero, it is difficult, it is impossible to predict. Those are the cases which are difficult to predict. A company like, let us say, just let you give me an example, Titan. 10 years back, forget 20 years back. 10 years back, Titan was a known company. Titan was a leading company. Why didn't you even think of researching about it or even watching it? No, you said past is not the future, and so future is different. So I will invest in something which might do well. You know what that is called? Where you try to guess the future. It is called speculation, or it is called some kind of blind prediction. Stock market investment, for your information, is not blind prediction. I am not saying Titan is a good company because it's done badly. Because it's done well in the past. I'm saying Titan is a good company because it is a good company today and it has a good future as well. Plus, it has a good past. Remember, there's a difference. Seeing only the past in investing is different, or seeing the past, seeing the present, seeing its potential in the future, and then thinking of investing in Titan or any other company. For example, any company which you see here, it could be HDFC, it could be L&T, it could be anything else. That is a difference, and that is a kind of what would you say? Thought process you need to have. Many people come with the logic, oh, that was zero, now it's become hero. Nobody could predict it, and it's nice to see at the back. It's nice to see at the back, but remember that was not zero earlier. I'm not talking about zero to hero. I'm talking about already good companies becoming better. I'm already talking good established companies which have continued to do well. I'm not talking about zero to hero. Zero to hero is definitely not possible to predict. Let me explain this as well. Let me explain this. This is something which you need to understand. Just look at this. I invested 6,000 rupees. And this statistics is very interesting. We started our workshops in the year 2002 approximately. The stock market workshops, other workshops, personality development, and etc. We started much earlier. If you invested 6,000 rupees per month, and look at it very carefully. Look at the statistics very carefully, because I want you to make an observation, and I've left it very, very clearly for you to observe. 6,000 rupees, meaning 1,000 rupees per company. 1,000 rupees per company. I put 6,000 per month into 20 years plus. It comes to an investment of, if you see the total, it comes to about 14 lakh 70,000 approximately. Keep it as 15 lakhs approximately. Today's value. I want to ask a question before that. Is stock market currently high or on the lower side? If you say high, type high. If it's on the lower side, type low. I want you to tell me what maybe you know, maybe I don't know. So I want you to check. You're saying low. Some of you are even saying high. Okay, you're not reading the news. Most of you are saying low. Most of it is on the lower side, because even 3 months back it was 30% higher. It's fallen 30%, which is a big drop in terms of stock market returns and the stock market levels. Most of you are saying lower. Recovering is not the question. Low or high? It's lower compared to a few months back. After considering the low rate, because it is 13th May, just 2 days back, The total value is coming to 1.42 crores for an investment of about 14 lakhs after 20 years. Average is coming to only 16% per annum. And if you see here, there is one company there which has given less than a bank FD, which has given almost like a bank FD of only 7.9%. I will not tell you the other companies, but this company, everybody should know, at least you'll get an idea. It's State Bank of India. It's given around 8% per annum on an average for the last 20 years. And in spite of one or some of your stocks doing badly in the portfolio over the period, it has given you some returns which is much better than your other avenues of bank FD or real estate or post office or whatever other instruments you're investing in. Remember one thing I want everybody to understand. Many people go with the wrong mindset towards investing in stock markets. Stock markets is, you're not investing in stock markets to make big money. You're investing in stock markets because you know that stock markets, if invested well, if you would invest with discipline, if you do some research, it will give you more money than, it will give you better returns than the other instruments available. And in the process, if you become rich or if you create a lot of wealth, that is a byproduct, but you are not going to invest because I will make crores of rupees. That's not the idea. This will give me better returns than somewhere else. Instead of me getting 6-7%, let me get 12% or 14% or 16%. That's the idea about stock market. Not saying I have to get 20% per annum and I have to make 10 crores by putting this small amount of money. Many people come and say, sir, I want to put 5 lakhs. Tell me after 20 years or 10 years, can I get 1 crore? Don't look for that 1 crore. 1 crore may come, but understand this 5 lakhs invested somewhere else will not give you sufficient returns or not give you the returns which you are looking for. So why don't you consider putting some amount of money in an instrument which is very likely to give you some returns higher than the alternatives? That's the idea of stock market. This is one thing which comes out of experience. The new investors jump into investing thinking that tomorrow morning they make lakhs of rupees, crores of rupees, and that's the end of the story. Let me show you something interesting before I go to the question answers. This was SIP or monthly investments. Okay, monthly investments. This yellow table. This white table, if you see the heading, it says one-time investment in the same stocks. In the same stock, there's no change in stocks. 14.7 lakh rupees in January 2000. May 2020, it has become 5 crore rupees, average of 17.9, about 18%. The same stocks, but all the money was invested at the beginning. And in the first example, you invested 6,000 rupees every month, slowly, not at one go. For your information, if you're wondering, this calculation, which if I did 4 months back, in January 2020, it was showing a value of 8 crores. Now it is 5 crores. Come back to me after another 1 or 2 years, it will again show you somewhere around 7-8 crores. And what is your investment? 14 lakhs, 15 lakhs, let it be 1 crore. Can you imagine your 1 crore becoming 8 crores in FD? Ever possible? I don't think it's possible. It never happens. In fact, just let me give you one more statistics. Just for your information. If you invested 10,000 rupees at around 8% per annum, 9% per annum in FD, after 20 years, you know how much it becomes? Around 40,000 rupees. 10,000 becomes 40,000 rupees after around 20 years in FD or post office or whatever. And for the 40,000, you need to pay around 30% tax based on your tax slab. When you made profits in stock markets in the long term, after 1 year, it becomes you have to pay a profit tax on the profit to the government of only 10%. So if I make 100 rupees profit, my profit is 100. So 10% of that, 10 rupees I need to pay. The same 100 rupees I make in some other instrument like bank FDs, 30% may go as the income tax. Okay, fine. We are. I just want to ask you one more question. Just to get an idea, quickly just type it very quickly. I don't want to spend too much time on this. Have you attended a stock market workshop? Yes, type yes. No, type no. Just very quickly. I don't want to spend a few seconds, more than a few seconds on this. Just to give an eye, just to know who are the people who are here. Okay, very quickly. I don't want you to even spend time on clicking. It's a 1 second click. Okay, 25% say I've attended the workshop, around 76% say no. Fantastic. I am ready to take questions and you to answer. I'm a student, I'm 21 years old. How to invest? If you're a student, don't start investing. Finish your studies, earn money on your own. Once you earn money, in the meantime, learn about stock markets, maybe attend some courses, maybe you read something on the internet, and then start. There is no hurry that you have to start as a student. No need to wait. Anirudh, no need to be in a hurry. Wait. Which stocks to invest? Let me make this clear. Moment you ask me or you ask somebody else which stocks to invest, you know what's the meaning of that? It means that I don't know anything about stock markets. Whatever you tell me, I will invest in that. Don't you see the problem there itself? You're already waiting for somebody to tell you what to invest, and you'll invest without worrying about whether he tells you right or wrong. You need to learn about stock markets. How you learn, whether through courses, through videos, through internet, whatever it is. We do a stock market course, maybe you can attend that as well. But if you don't learn and if you want to just invest before that, I would suggest don't invest in stock markets, keep it in the bank. That would be safer. Don't ask anybody where to invest. Ask how to invest, learn about it, learn in detail, then invest. That makes much more sense. That's going to be value for your money because you're not going to lose your money. Now, is it advisable to invest in real estate or gold? Um, Real estate is, of course, if you need a house, if you don't have a own house, your parents don't have a own house, it is maybe a required thing to do. But remember, if you're going to take a huge loan and buy a real estate, take a big EMI in real estate, you need to be very careful whether you're going to be capable of paying that back for the next 20 years. So you need to make a lot of judgment on that. Gold is not an investment in India. Gold rates go up and down now and then, but it is not an investment because usually what people do is they buy some gold, keep it at home, usually in the physical form, and they never sell the gold later on. And what's the point if you can't sell the gold? Then it does not become an investment, it becomes a personal property. So gold returns are not good, plus it's not a very suitable investment in India. Probably real estate, depending on your capacity to repay the loan, you can consider it, but not at a very young age because you're going to have the EMI burden right through them. Basically, what is meant by control and emotions? See, giving you a very small example. Stock markets fell massively in the month of March and February, March because coronavirus and a lot of issues. You've seen this in the news. Many people started panicking. Let me ask you a question, a very common sense question. Just because coronavirus came, recession came, and a lot of economic problems happened, do you think that a company, let us assume it is, let us say it is HDFC Bank. It's a huge bank, biggest bank in India. Do you think that HDFC Bank will close down or HDFC Bank will never improve in terms of its share prices? You'll say no, it will improve. But most of the people in stock markets don't have any idea about investing. What they do, they start panicking. Oh my God, the rate has fallen. Let me sell because before it falls further and make further loss, let me sell. This is where you need to control your emotions, where everybody is fearing, but you know logically there is nothing to fear. It's a temporary phase, maybe 6 months, maybe 1 year. After that, it will start improving. And that is some control over fear. Similarly, greed. Many people have become too greedy to take very risky instruments, put a lot of investment which don't have the risk capacity. Suppose you have only savings of 10 lakhs, you invest all 10 lakhs in stock market. That's a very risky situation to be in. When it starts falling, you will start panicking. Is long term is better or short term trading is better? There is nothing like better. Long term will give you much safer and much profitable returns. It will give much better returns. Short term, some extra effort is required, some extra risk is involved, and it will give you a decent amount of money in a shorter period. There's nothing like better or worse, but long term is one thing which you should start in the beginning. Later, when you have some capital which you can take some extra risk, that's the time short term would be ideal. On what criteria stocks to be selected? This is a question which if I talk for 5 hours also not important, but broadly telling you common sense. You just need to have some common sense. You need to see some company and see whether this company will do well in the future. Its product and services will be required in the future. If you can get confidence on that, then you know this company is worth investing. Many people don't know that. They are just seeing the name of the company, seeing the name of the person running the company and invest. That's not sufficient to take a judgment. Is it good to have a equity, a mix of equity MF and direct equity? Yes, it depends on your risk appetite. You could invest some amount in stock market, some amount in mutual funds. There is nothing like good or bad. Depends on your risk appetite. For example, I don't invest in mutual funds. I directly invest all my money in stocks because I know I have the risk appetite. I know I know how to read the stock market. So it depends on that. Can you please comment on Yes Bank why it was a hero but suddenly became zero? Let us assume actually Yes Bank was not a hero. It was, I will say, somewhere slightly lower to the hero, or any company for that matter, similar companies where it has fallen a lot. Remember, you are never investing in one company. This is one thing which everybody should really listen very carefully. You are never going to invest in one company in stock market. You're going to invest in a basket of 6 or 8 or 9 companies. And if one of the companies does not do very well, or in fact fails, really does badly, it will not affect your portfolio by a large margin. It will have some effect. It is like saying 11 batsmen are there, 5 are failing or 4 are failing, remaining 7 people performed quite well, team does quite well. But if all your players are performing badly, that's the time you have a problem, which is unlikely unless you don't know how to invest and you blindly invest. There is no chance of all your investments going wrong. If one investment goes wrong, nothing to worry. You have to accept it's a mistake. There's nobody on earth who could predict such a thing, and just move on after that. Hemant, we don't recommend futures and options unless you are worth a large, you have a net worth of a large amount of money. Let's say you're worth, let's say 50 lakh rupees, you have assets of 50 lakh rupees, and you say, I don't mind experimenting with 1 lakh rupees, then to an extent, okay. If you have limited amount, you're still starting a career or you're still growing in your career, no need to take additional risk. It is like driving the car at 120 kilometer speed. It is nice to drive at 120 kilometer speed, but if you make a mistake at that speed, there's nothing, you won't be left because it's going to bang into something and it's going to be a massive accident. Stock market investing with just normal stocks, and you're investing for long term, that becomes like investing at 60 kilometer speed. You can control your vehicle. How stock prices are decided every day? It is just demand and supply. I'll ask you a question and you'll get the answer. How tomato prices are decided every day? How banana prices are decided every day? Buyers and sellers, depending on the demand and supply, a price is decided upon. Similarly, for stock markets, the buyers and sellers, whatever the midpoint, whatever they agree on, that becomes a rate for that day, and it keeps moving every second. Some of the questions I'm ignoring because the question is something which cannot be answered in 5 or 10 minutes. It requires a long time. How to do proper research? It's not a question to be immediately answered, but I given you some glimpses of how to decide some few minutes back. I'm invested since 10 years. I gained from MF, but not from equities. It purely means that you don't have the right emotional balance of equities. For mutual funds, since you kept investing on a monthly basis as an automatic debit, it became forced investment. In stocks, many people have to manually invest, and they don't invest when it's low. They only invest when it's high and when everything is nice. When it falls, they get scared. When it's high, they get very excited. And that is why probably one of the mistakes you might have done, I'm assuming. Is it right time to invest? This is not a nice question to ask. The question to ask yourself is, do I have 10-20 years time? You may say yes, because most of you are young. Then you say, can I invest some amount of money every month? You say, yeah, I can invest some small amount or whatever amount every month. Then it's the right time to invest. If you have a longer time frame, 10, 15, 20 years, and you can invest every month, then always it's the right time to invest. If you have only 3-4 years left to invest because you're already 57 years, your retirement is coming close, and you don't have risk appetite, etc., then not right time to invest, because stock markets don't give very good returns in a shorter period of time. Do you have offering in fundamental tech? So as we conduct stock market workshops, we may inform you in the future sometime. You can take a decision to invest at that time, to learn about it at that time. Is it good to invest in gold? I've already spoken about this. How to analyze and learn on technical analysis on shares to buy. We do conduct a workshop on stock market technical analysis. Plus, you can do a little bit of research on the internet, but do research before investing. Don't be in a hurry to invest. Can you suggest any book for improving EQ that helps for trading? I don't have any specific recommendations for EQ, but I will say There is a book, if you have not read it, at least you should attempt to read. It's a large book, but there's a book called Intelligent Investor. It's a really good book. It's a thick book, but even if you can read quickly only certain things, whatever you understand, it makes a big difference because it talks about certain management of emotions. Intelligent Investors, a very famous book written by Benjamin Graham. Mutual funds or equity, which is best? There is nothing like best or not good. Direct investment in equities is much better, but whether you know how to invest or not is a question you need to ask yourself. If you don't know anything, obviously mutual funds is better than putting in the bank deposits, or better than putting blindly in stock markets. Going down, stock market workshop, we will inform you. It's going to be scheduled shortly. It's going to be an online course. We will inform you. Commodity trading, definitely not. Anything where there's a very high chance of losing money, we will not talk about it, because our idea is at least you should make decent profits or good profit, but not have chance of losing money. If you're a student, don't be in a hurry. I've seen a lot of people are in a big hurry to invest. I don't know what is hurry. I think a lot of this thing on the internet will say start investing as a student, etc. No, finish your studies, earn some money, and as you earn your first salary, in the meantime, start learning and investing. 14 years to retire, Raghavendra Rao. Yes, it is beneficial to invest in stocks because 14 years is a good period of time to invest. If you said 4 years, I would say no. 14 years, good period, definitely. I'm a forced retiree. You're forced retiree. I have some money to invest already in stock market in my own way. I invested during organization, made some money. Oh, very good, fantastic. You finally somebody says I made money. Let us know when the stock market workshop. We'll inform you through an email probably. How long should we hold the stock if it's in the downtrend? Downtrend, uptrend is not the question. How long till you need the money? If you are a 30-year-old person, maybe you want to retire at the age of 50, then wait till 20 years. Don't take out the money just because market is up or down. Take the money when you need the money for your expenses. Looking for a financial few months, get well, and then maintain my own financial fitness well. We do conduct courses. Please attend this FIRE course yourself. It's a good course. We conduct an online course on financial independence that will be useful for you, Naveen Kumar. Many people are repeating the question. It's a good time to enter. I've already answered this. Covering stock market. Samir, no, we will not be covering stock markets. We'll be covering mutual funds in that FIRE course. It will be available to you in the coming days. You're already enrolled for the FIRE course. Is it, okay, many questions are repeated. Stock market does not come in the FIRE course. Okay, Bharat asking, how long does it take for the market to improve from today's situation? It may take 1 or 2 years for it to go back to the levels it was in the past, but that should not be a thing to worry about. You need to start investing regularly as long as possible. And most of you are very young, below the age of 40 years. There's a lot of time to invest. Yes, in a basket, Krishna is asking, in a basket of 6 or 7 or 8 companies. If you are investing in 8 companies, ideally as equally as possible in the 8 companies. 100 rupees you're investing divided by 8 approximately, because there'll be some kind of balance. Regarding our stock market workshop, we'll inform you. Don't worry about that. Thank you. Okay, can we take money when rising, falling, no movement? Don't start timing the market. I will buy at the lowest, I will sell at the highest. Nobody knows when is the high and low. So don't try to time the market. Have you made considerable loss in stock market? No, because I learned from my father. He made a lot of mistakes at a younger age. So I learned. So I have not made the same mistakes. So thanks to him, I have learned a lot of things. I have not made losses in stock markets. What kind of broker do we choose? Zero commission. You can take a zero commission broker or any other broker. It will not matter. Which demat account you have is not important. What you invest in, which companies you invest, that will make a difference. So remember that. Vedanta's listing, if many of you have asked this question, Vedanta listing, delisting does not mean Vedanta's closing. Their shares, the company wants to buy back from the shareholders and keep it with the promoters or the owners of the company. Right now, there is no clarity on this. Company has to make an announcement, and then shareholders have to agree on that price. If shareholders say that I don't want to sell at the rate you are asking for, then the deal does not go through. So don't think that just because company says I'm going to buy at this, you are forced to give it. You are not forced to give. Continue to hold if you're holding, and wait for some more information and then take a decision. Always remember, never one company. Is a basket of companies investing in about at least you are investing for about 7, 8, 6, 7 companies. I am 54 years, Venkatesh. For 5 years investment, it's a little risky. If you can invest monthly wise, it's fine, but it's a little risky because your time frame is very short. If you can say that after 5 years also I will not take it out unnecessarily, then you can invest. If you say 5 years later I definitely need the money, then be a little careful. Don't invest a large amount because it takes time. Option trading, futures options, we don't recommend. It is risky. It's not that you can't make money. It's a risky kind of instrument. You don't have the risk appetite. It becomes a problem. If you're asking about stock recommendations, we are not going to give any stock recommendations because then you're going to blindly start investing. That's not the idea. Keep at least about 6 to 10 companies in your portfolio. That will be ideal for investing in stock market. Not one, not 25 companies. How many shares we need to buy from one company? It depends on your risk. It depends on your capacity. You could buy one share, you could buy 100 shares, depending on how much money you have for investment, depending on what is the total investment you want to invest in stock market. Okay, thank you. So I think we come to the end of the questions. Thank you for your time of being there. Hope you got some new ideas. Hope you got some new perspectives of looking at stock market, because I personally feel learning about stock market is okay, but if you don't see it the right way, there is no point, because many people think stock market is some kind of just some lottery. You put the money, it comes or it does not come. It is luck. It is not luck. It requires a lot of research. It's not something which I can tell you in 1 hour, but I want you to think about it, that it is possible if I learn about it. It's possible if I do my research. If I don't do anything, then I deserve a loss. You deserve a loss because you are you're trying to find shortcuts in life. It doesn't work, especially in stock markets. Okay, so thank you very much. Thank you for your time. I hope it was of some value for your 1 hour 15 minutes which you spent with us today. Thank you very much. Mayur, thank you for your compliments. He says fire is an amazing course. He's a part of the course. Thank you for your appreciation. Many people are part of this fire course. Thank you for spending time. Thank you. Bye bye.